So thanks for being here, David.
That's a funny story. My middle name is Russell, and so when I go to make reservations at a hotel, I usually use DRYs. And one time down in Naples, Florida, I went down there and they saw me come in and welcomed me as Dr. Wise and gave me an upgraded room.
Nice.
Kind of funny. Thanks very much. I appreciate the nice introduction, and thanks so much everybody for being here on a Saturday afternoon, weekend, when you could be out relaxing, and instead you're trying to improve your trading, and I commend everybody for doing that. Again, my name is David Wise. I'm an options trader and a short-term options trader and swing trader. I use a piece of software called the SPY Super System, which we're going to get into today, which identifies when institutions are in the trades and when they're not. I have a live trading room that we'll talk about. I'm there every market day from market open to market close. I think one of the few rooms that actually has a trader actually in there working with the traders all day long, answering lots of questions and showing charts and answering setups for folks to see what they like for a trade and what they don't like for a trade. Also have a text alert service. So we're going to talk about all of those things, and I'm also going to spend some time on Heikinaichi candles today, which is a candlestick structure that you may have heard of, you may not have, but if you learn how to use it, you can improve your trading dramatically by switching to Heikinaichi candles when deemed appropriate. All right, so first thing I have to do is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, if you have any questions, by the way, you put your name, username, and number in the chat box, and Rory from Right Line will get you a call back. But also, I'll also be monitoring the questions as I go through the presentation, so that if some pertinent questions come up that we can answer right then, I'll do that as well. But I'll put this back up at the end of the day, so you can put you can get a hold of him if you want to. Again, your username or Skype username in the chat box, and here's his number. All right, this is just kind of a quick graphics of the alert service. It's called the Compass Alert Service. When we first started, when the software was first created to identify when institutions are in the trade, it was called the Compass system, and it was for quite a few years. It's been enhanced quite effectively in the last 2 years or so, and it's now called the SPY Super System. But the alert service basically is, as I identify high probability trades to take in the room, I'll send them on alerts to the alert members, and they will get them on their phone. And I'm a member of the alert service, so I can identify how quick these alerts come in. And it takes about 5 to 10 seconds from the time I enter the alert into getting to my phone. All right, so that would be for the alert service. Now I'm going to go through this trade, this slide. If you've seen my presentations before, you've seen this before, but please bear with me. This is very, very important, and it's very important for folks to understand what drives the market. And this is really important. These little small marbles here, these are all the retail traders such as myself, and tens of millions of them in the world that are retail traders. And these are the institutions made up of Goldman Sachs, basically investment banks, also mutual funds, pension funds, and I guess hedge funds are in here too. A lot of hedge funds are part of the institutions, but this is what drives the market. Now, there's quite a few different institutions, and what we're trying to identify is when a majority of the institutions are pushing a stock one way or the other, not when they're fighting against each other, but when they're creating a trend. And this is what creates a trend. When we're in the market, just the retail traders, when we're trading, and we don't have any kind of a trend being developed by institutions, all you're getting in the market is a lot of chop and a lot of chaos. And what you end up with is a lot of chop and a lot of chaos. And if you're trading, what you're doing is getting lots of little losses, and it's very frustrating. And this is where traders run into problems. And so our job is to identify when the institutions are in the trade. If we know the institutions are in the trade, pushing the stock up or pushing the stock down, your chances of success become much, much better. These would be considered one of the criteria for high probability trade setups. The institutions must be trading those stocks. Okay, now this is something I kind of added recently. It seems a little off topic, I guess, but this is a blackjack table, ace and spades. It's a blackjack, couple of $100 chips. And why is this here? Well, when I first started trading, and it was, again, I've been professionally trading for about over 16 years, but people would tell me that trading was gambling. I mean, it was fixed. You couldn't make any money on it. You just, you have no opportunity to be consistently profitable in it. And the reason I bring this up here with the blackjack is when I was much younger, when I was, just out of college, I went to Las Vegas and I learned how to count cards before I went out there for playing blackjack. So I became a professional blackjack player, and that's how I made my living. And you do this by tracking the cards. Tracking the cards is not counting individual cards. It's tracking how many little cards are removed from the deck, and those would be deuces through sevens, and how many big cards are eliminated from the deck, which is all the face cards and the aces. And the reason this is important is as the little cards are removed from the deck, the composition of the deck is different than it was when it started. And if you have a deck composition that consists of a lot more big cards than normal, then the players have a fairly large advantage over the house. And when there's a lot more little cards than normally would be in the normal composition of the deck, then the house has a big edge. So you track the composition of the remaining cards, and you make your bets accordingly. If it's in your favor, then you can bet bigger. If it's against you, then you just bet the smallest amount. So this gave me a mathematical edge over the casinos by knowing when the cards are in my favor. So here's a game which is considered gambling that you can actually beat if you have a methodology or a system to do it with. And the reason I brought this up is trading stocks and options is very similar in that without knowing what the institutions are doing, the trader has no edge. In essence, you're gambling. You really are gambling if you don't have an edge and a methodology to use. And I consider the SPY Super System, which is the software I'm going to show you today, my card counting system. It basically gives me an edge over the other traders, allowing us the ability to become consistently profitable traders, because we're trading when the institutions are in there. We're not trying to beat the institutions. We're trying to follow them and take money from other retail traders. And the SPY Super System, when I use it in conjunction with identifying the highest probability trade setups using other technical analysis, it can lead to consistent profits. And you'll see the profitability that we've had in the trading room for the last 3.5 years has been extraordinarily good. We have a win rate of between 85 and 90% every month. And it's because we can identify when institutions are in the trade and take those trades. We do have a couple of rules to trade by in the room and the alert service. It's called trade the best and skip the rest. Simply, this means we're going to only trade the very best setups that there are, which means A, the institutions have to be in the trade, and then B, that particular trade has to be technically strong. No nearby resistance to stop it. It has a good daily chart that looks like a nice trending chart. Those are the things that make trade the best. Skipping the rest basically tells us to not take anything that the institutions aren't in and aren't pushing. So that's important. Next one is, and this is basically, I use this because our objective is not to make trades. Our objective is to make money. This is done to keep traders from overtrading. Overtrading is a huge problem with retail traders. They trade too many times. They feel like they always have to be in a trade. So I say this every day in the room. Our objective is not to make trades. Our objective is to make money. That's all we're really trying to do. You're not getting rewarded for making 20 trades a day. You're getting rewarded for making 2 or 3 good trades a day. Right? So that's another one of the rules we have. Maintaining discipline is very, very critical. Now, discipline is once you have a strategy and a methodology that you understand, you learn and understand and trade, then you stick with it. That means don't be listening to other people on CNBC or on being posted on X. Don't be listening to people that think they know what they're talking about and following them. So you need to learn and follow the process, and then remain patient. Very key thing here, remain patient. Again, our objective is not to make trades. Our objective is to make money. We do that by being patient, waiting for the trades to come to us, and then taking the very best ones that there are. Okay, and as a profitable trader, obviously we need an edge over other retail traders. our edges, or my edges specifically, is the SPY Super System software. Now in the room every day, you can buy the software. I'll show you that at the end and have it installed and use it yourself. But I have this displayed in the room every single day from market open to market close. And we can switch the symbols and see what we're looking at, but we can always tell whether the institutions are in the trades or not. So if you're in the room, you'll always see that. But this is the major edge we've got. This is the one that tells us if the institutions are in. Second thing we use for criteria is we trade relative strength and relative weakness. Now, relative strength and relative weakness does not mean RSI. This is not relative strength indicators. I don't use the RSI. Relative strength means if the SPY, the S&P 500 is trading sideways and down, for example, on a 5-minute chart, and your stock is stacking green candles, it's got relative strength. It's stronger than the market. It's going to give you an edge by taking a stock with relative strength. And if the market's weak or going up and you want to go, you like a stock short, you want a stock that's got relative weakness to the market. So this is a very important criteria that a lot of retail traders don't seem to understand. I know a lot of retail traders. I don't know an awful lot that actually understand trading actual relative strength and relative weakness. I hear all the times about RSI and MACDs, but this is what really matters. Then we want to trade with the market trend. The market was trending up really beautifully on Thursday this past week. All the trades you take would typically be long. You're going to trade with the market trend. If the market's just choppy, then you can trade in either direction with the very highest probability trade setups for that particular day. And the last thing is to buy near support and sell near resistance. Don't chase stocks up or down. Wait for a stock to come to a support or resistance level, bounce off of it, and go back into the trend. You're going to be in with a much better likelihood of taking a small loss if it does happen to go against you. So buy near support, sell near resistance. Very critical things. If you follow these four edges right here, you're going to be ahead of about 98% of retail traders in the world. Okay, the system with the composition, which is now called the SPY Super System, this is what it does. It identifies the highest probability setups for us while sidestepping the setups that look good. They're going to fail more often than they succeed by finding when the institutions are in there. It does this by identifying when institutions are driving the move and when they're not. It analyzes very complex trading data, and it displays the results in easily identifiable format. You're going to be able to see on the screen when I show them to you very, very easily how you can tell if the institutions are in the trade or not. And this visual element, it's colors that are being shown here, it makes it possible for even new traders to find high probability trades. And I think this is the one thing that really can expedite your learning curve when you're trying to learn how to trade, by having the ability to identify when you're getting a stock that's likely a high probability trade setup, okay, without knowing an awful lot about technical analysis at the beginning. Okay, and how are we getting an edge over the retail traders? Well, we're only taking trades that are being driven by institutions, as I said. We trade stocks that have relative strength or relative weakness versus the SPYs or the Qs, and we trade in the direction of the overall market trend, right? Those are key things. And it gives us an edge because our trades are going to be supported by institutional buying or selling. We're not in there alone. We're in there with the institution. So we know we've got some institutional buying or selling behind the trade we're taking. It's going to be outperforming the SPY or the Qs, and it's going to be moving in the direction of the overall market. Those are key edges. It's going to put you ahead of most other retail traders. All right. Now, just to emphasize, we're going to get into the software I want to show you, but I just want you to remember something when we go through the results that we've had in the room. We've had excellent, as I said, 85 to 90% win rate month after month after month. And I think in the last 3.5 years, we've had one losing month. And it was a small losing month, and I'm going to show you that one. But the SPY Super System software, it's the critical element in finding and trading the highest probability trades. This software is the engine that drives our exceptional results. When you see the results we've had, remember, knowing when the institutions are in the trade is what makes this possible, right? And the ability to identify when the institutional players are driving a bullish or bearish move, and when they're absent, it's the key factor in pinpointing the high probability trade setups. Very critical. And again, that is the function of the SPY Super System software, and it's the critical component. So I just want to emphasize that this is something that when you see the results, remember this is where they're coming from. All right, I just kind of a little blurb here. I have Brightline has YouTube feeds. I'm on every day. I'm going to be on from 11:30 to 12:30 every day next week. I go on there every single morning around 11:30. And when you get into the YouTube feed here, you're going to be in the room. So you'll see the room exactly as it's done, as it's being presented every single day. You'll see the charts, you'll hear the question, you'll see the questions, you'll see my answers, you'll hear me talking about stocks. All right, so that's at 11:30 each day, rightlinetrading.com. It's the YouTube channel. Okay. Now this thing, I just threw this in today because I really find this important. I did a video on this, and I'm just going to run through these. But these are what I identified as the most common mistakes retail traders make. And I've made them all when I was learning how to trade. But there's one here specifically that I'm going to focus on. One is not considering current market conditions. Knowing what the market's doing on a daily basis and on a 5-minute basis is important. If you're trying to trade intraday trades, you're trying to trade maybe a long trade, try to buy something long. If you don't have a trending market, you're going to have to stay in and get out of the trade quickly. When the current market conditions are choppy, you have to trade differently than you do when the market conditions are trending. So it's critical to understand what the current market conditions are. All right. Over trading, big, huge red flag for retail traders. I know lots of retail traders. I've mentored lots, and this is one of the biggest problems. And this comes from lack of patience. You feel like you're a retail trader. You feel like you're a trader. You feel like I've got to be in a trade all the time. You don't, right? No trade is a trade. Cash is a position. You don't have to be in a trade all the time. So this is a big, big problem. Over trading. Trading your P&L instead of your technicals. This thing I've talked about many, many times, and that is people that are watching their P&L when they're trading are now introducing emotion into their trading. They look at the P&L, if they go down by $300-400 on a trade, and then it comes back up, and they're up about 150, and then it comes back down, they're only up to $50, up $50 a trade, they bail out. They bail out because they relieved, they're back to green again because they were red, and if they get out of the trade, so they're trading off of their P&L, which is creating emotion instead of the technicals. If you get into a trade, it's a good technical setup. You shouldn't be getting out of it unless that technical setup breaks. So when these folks are getting out of the trade to get a small little gain, a good technical trader would likely be adding to the position right there because it's still a good technical trade. So please don't trade off your P&L. I recommend not even looking to watching your P&L during the day. I don't look at mine at all. One of the best pieces of advice I got when I started trading was a really successful retail trader said, just treat it like a video game. Treat it like you're playing a game against a whole bunch of other retail traders out there that looking at red and green candles, and you have the information and the knowledge to trade better than they do. Forget about the P&L, focus on the technicals. And I get this all the time. Trading what you think instead of what the price says, a big problem here. This is, I'm gonna talk about this in just 1 second. This is basically people that go to X and start reading all kinds of posts out there and taking trades off of there, or they get Bloomberg News in the background or CNBC and they're trading off of that. Trading what you think instead of what the price says is a huge problem. It's going to kill you. It creates a bias in your mind when you think that something's going to happen, even though it hasn't happened yet, and you end up trading that way, even though the market's not going that way. Being over leveraged, too much risk, not using daily chart for swing trades. We'll talk about this. Lack of patience, obviously critical. Forcing trades, which is related to lack of patience. Attempting to pick bottoms and tops. Anybody ever tried to do that? They're in their head, they see the stock moving up and they say, it can't go any higher, or it can't go any lower, time to get in. Big error. Not waiting for confirmation to enter a trade. In other words, try to get into a breakout trade and it fails. And FOMO, fear of missing out. This is related to lack of patience. All right, so those are the most common mistakes. I want you to think about this one for a minute. Trading what you think instead of what the price says. Okay. This is something Stephen Hawking said that relates to trading what you think instead of what you see. The greatest enemy of knowledge, it's not ignorance, it's the illusion of knowledge. When you're trading what you think the market should be doing, you think the market should be bearish. Look at all this bad news. The jobs report's terrible. The market should be going down. I've got to get bearish. When you're doing that, you're trading with the illusion of knowledge. You're trading something that isn't true, that you think is true, and it's destroying your trading. And it'd be better off to somebody that comes in there who knows nothing. They're going to do a lot better than someone who's trading under the illusion of knowledge. Okay. Hey, you have Ron. Yeah, you're on the West Coast and missed some of the speakers. Yeah, the whole Traders Corner will be recorded, and you'll get a copy of the video on the whole thing. Okay. Now I'm going to run right into the actual SPY super system. I'm just going to do a graphic of what it looks like. This software runs on Thinkorswim. You don't have to trade on Thinkorswim. You can trade anywhere. I don't trade on Thinkorswim, but the software loads onto Thinkorswim or on NinjaTrader. But this is what it looks like on Thinkorswim. This is where I actually use it. And this is I just blew this up so you can see where the indicators are to let us know if institutions are in the trade. The first thing here is this is the McGear momentum oscillator. This is a modified oscillator. This does not include divergence. This just includes straight momentum. This is the current time frame momentum. This is what the momentum is tapping on a particular stock for the current time frame of the chart you're looking at. In this case, if it's a 5-minute chart, this is the momentum on a 5-minute chart. It consists of colors. You've got red and yellow for bearish and blue and green for bullish. This is current time frame momentum. This is multi-time frame momentum. Okay, and this is the long-term trend. This is 3 different times, and this is the long-term trend across multiple time frames. If you were trading like on a daily chart, this would be 1 day, 3 days, and 9 days, and it's going to tell you what the momentum is, bullish or bearish, across all 3 of those time frames, right? And then this is the long-term trend. So this is what tells us whether the institutions are in the trade right now or not. Okay, up here on the pricing portion of this, on the 5-minute chart, a couple of key things here is the volume weighted average price. You should always have that on your 5-minute chart. And the reason is institutions all use it. Volume weighted average price, it's a big support and resistance level. It's called the VWAP. This is the 15 EMA. This is a smooth 15 EMA. In other words, it's the EMA of an EMA. And this is the little thin red line. This is also a support and resistance level we use on the 5-minute chart. Okay, and this white line that you'll see here, it's created by the SPY super system. It's a pivot point. It's a very strong support and resistance level. And then you have these little arrows here. These are pop signals or pop out of the box symbols. These tell us when a stock is breaking compression to the downside on the blue, or breaking compression to the upside on the bullish side. And it's one of the things we can use to enter a trade at a really, really good level. All right, so that's what the SPY super system looks like, and how we know the institutions are in the trade. This I'm going to show you a couple of charts. One other thing we just added to the SPY super system is this volume line, VOLD trend line. This tells us what the market internals are. So this is telling us what the market internals are for the entire market, the whole New York Stock Exchange at any point in time or during the day based on 5-minute charts. All right, so if you're looking at Google may look bullish, but this may be showing trending down yellow, trending down red. This shows us what the current conditions are for the 5-minute candlesticks on the market. And it's basically made up of looking at all the volume on stocks moving up, subtracting all the volume on stocks moving down. So it tells you whether you've got more stocks, more volume going up to the upside or more volume to the downside. And this will tell you that. And it helps a lot, because if you're trading a short stock, for example, you're trading short for the day, and this happens to be trending down for the last 20 minutes or half an hour, you're trading with the market trend of the overall market. So that you can use that to help you align your trades to bullish or bearish. It swings back and forth, but it's a nice one. These two are going away. We're not going to use these anymore. I never really found them very effective, so we're going to dump them. Anyway, so there is our SPY super system. Now this is a trade we took on NVIDIA not too long ago. This was back in first part of August, but I just kind of show you, this is a daily chart, again, of a SPY super system on NVIDIA, right? So if you look at it, you can see the current time frame momentum, which is daily, the multi-time frame momentum, which is 1 day, 3 day, 9 days. They're both green, which means very bullish, very, very bullish. Momentum indicator is strong, very bullish. The trend is strong. So this was a very strong stock. So what we were looking for is we were looking for a place to get into it. Now, we have a methodology that we call PBOs, or pullback opportunities. This reflects a pullback opportunity. The stock moved up, It pulled back to a support level, and we're waiting for it to bounce. And here we get a bounce right off this. This is the 15 EMA on the daily chart. It bounces right off of that. This is where we took the trade. Man, they're obviously the institutions are buying it. We take it at a nice level after this pullback, and we get out here on 8.7 and 32% profit in the NVIDIA trade. But I want you to see how the institutions are in there, and it was easy for us to see that the institutions were all in there. See, back over here, they had started to get a little bit bearish, and now they switched back to bullish again. All right, this was SMR. This was another swing trade we took. Again, look at the indicators. This one's yellow at this point in time right here. This is the earnings. It went yellow. That's bearish. Then it went back to green. The multi-time frame was already green. We take the trade right there. And that trade popped up on SMR, getting on 513, out at 515, 56% profit. So 2,000 invested in a trade, created $1,170 profit. And for my results, I'm going to use $2,000 as a base. It doesn't mean anybody uses that, but I have to have something to use to give you the profitability month by month and week by week. So that's what I always use. 2,000 invested in the trade. Since they're options, obviously, if the options are $1, you can buy 20. If they're $2, you can buy 10. But keeping this price the same. But that's what where I come up with this from. All right, so there's that nice bearish to bullish, big pop here, nice profit in SMR. This was Tesla. This is a 5-minute chart. This was an intraday trade on Tesla using our indicators. All right, so this is the morning. Everything you see, it's blue, which is bullish. Green is even more bullish. And this is a 5-minute chart. When we're trading off the 5-minute chart, and 5-minute charts we use for what's called SPY Super System methodology trades off the 5-minute. We're not looking at the daily chart because we're only planning on being in these for 2 or 3 or 4 5-minute candles. These are not swing trades. They're not even long day trades. These are very quick intraday trades. So as Tesla popped up above the VWAP, we take it right here because it's everything that's blue, which is bullish. We don't care about the multi-time frame if we're just trading off the 5-minute chart, right? For the intraday trade. If this was a swing trade, we want both of these to be aligned, but they aren't. So it pops up and we take it here, and this is where you get out. It comes up here, tops out, and then it starts to pull back again with some red candlesticks. You're out of the trade, right? So that's Tesla. And this is an intraday SPY trade. This was just taking a quick 5-minute trade on the SPY. Bearish, selling. Right here about 11:10, switches to bullish. Institutions are in. We get a pop out of the box symbol through the VWAP right there. Volume weighted average price pops up through the VWAP. We take it right here and we ride this 5-minute candles up. Again, this is an intraday trade. This is not a swing trade. We're only going to be in this for a few candlesticks. So I'm not looking at the daily chart here. I'm just looking at the 5-minute chart. Any trades that you take that are going to be all day long, if you want to be in for 4, 5, 6 hours or overnight or 3 weeks, you've got to have your daily chart aligned with your 5-minute chart. But for the intraday trades, it's not necessary because you're only going to be in there for a few candlesticks. Okay? And this was a Wendy's trade. This was another daily chart. Just kind of show you, again, here's Wendy's, here's their earnings. Notice it went from buying blue to selling red right here. We take the trade right here and route overnight in this little pop down right here. Okay, institutions are selling it. You can see they're selling it. And this was a daily chart. So the daily and the multi-time frame on the daily has to be aligned with the current time frame. So they were both red. That means they're both bearish. Okay, this is somebody who doesn't, just to throw a humor in here, this is somebody who's trading emotionally. This is somebody trading off of their P&L. They get into a trade in the morning on FOMO. Somebody that heard Netflix was going to move up big today, so they jump in after it's already moved up about 8%, way away from any support levels, and they get in and it turns around, heads back down, heading for support. And they don't know what to do. Basically, they're just freaking out. And I think most every trader has felt like this at some point in time. And it's because you don't have a good methodology and strategy to follow. You're going to get into all kinds of emotional turmoil trying to trade. All right, and this is somebody who actually has a method and strategy they're using. They have the SPY Super System. They can tell that the institutions are in the trade. They take the trade and they're happy that they're making some money. I don't get this emotional about trading, by the way. I trade very methodically. Okay, so before we get into Heiken actions, I want to talk something about The process precedes results. And this falls again back to don't trade your P&L, trade off of what the technicals are telling you. And in order to do that, you've got to learn high probability criteria and strategies. And you've got to learn that before you start focusing on results. This is the most important thing. Learn the setups, learn how to read when institutions are in the trade, understand relative strength and relative weakness, know what the market trend is. Once you've got those things pinned down and you can trade with a nice method off of that, then you can start considering whether you're making money or not. But because focusing on your results or your P&L without having a solid process to follow is going to end in failure. I get a lot of people that take trades which are bad trades. And they say, look at that, what do you think of this trade? I say, it's not a high probability trade. They'll take it and they'll make money and they'll tell me, see, it worked. What they've done is they've reinforced in their mind this bad trade, and they're going to start taking it more and more, thinking that they're going to win, and it's going to kill them. Because just because you have a bad trade doesn't mean you can't win on it sometimes. Just because you have a good high probability trade doesn't mean there's going to be losers. But if you're focusing on you're trading your P&L, and you don't have a strategy, you're going to have lots and lots of losers, and it's going to knock you right out of the game. All right, this OODA loop, I'll leave this in here for anybody who wants to see this when you get the video on this. This is just a mental checklist you go through when you're trying to trade. Military uses this, corporations use this. It's called the OODA loop. It's observe, orient, decide, and act. So for me, observing is using my scans, watch lists, and news to identify prospects. Orient, identify whether the prospect meets the high probability criteria on the daily and 5-minute charts. Identify support resistance levels, know the next earning dates. In other words, know everything you need to know about that particular stock that you're going to take based on its options, etc., before you decide it's good or bad. Well, now you've oriented yourself. When you find something that looks good there, decide. Make your decision on whether this trade qualifies as a good high probability trade setup. If it does, take the trade, act. Try to avoid analysis paralysis. Okay, that's the OODA loop. Michael, question, okay, on 5-minute trades, I mostly trading 0-day options? I am, yeah, on the intraday trades. I mean, I'll take some of those on something that's a stock that has weekly options, and I'm just going to get in and out. But if you're trading the SPY, the Qs, the IWM, or the futures, I use 0 DTE, 0-day expiration, except once it gets past about 1:30 in the afternoon. If I'm trading the SPY, for example, at 2 o'clock in the afternoon, I'll take the next day's expiration date so that if I get a compression takes place during that day, you know, if the stock moves sideways for half an hour, I won't get so much time decay on the calls on the puts if I take the 1-day DT. But basically there's 0 DTEs on those 5-minute trades if they have 0 DT options available. Okay, and here's the basic high probability trade setup funnel that I use. Again, this is a mental process. If I'm going to take a trade, I'm expecting that I want the daily chart and the 5-minute chart to align. If I'm going long a stock, this is not for the quick 5-minute trades. This is for swing type trades, which could just be 4 or 5 hours. The daily chart has to be bullish if I'm going long. It has to be bearish if I'm going short. I will not take a trade. It's a swing type trade if I'm not trading with the direction of the daily chart technically, and if the institutions aren't in it. We want to trade with the trend, both stock and market. What's the context of the market? Is the market choppy? Is choppy today? Is it trending up today? Big difference. You've got to know what that is because it's going to impact how long you stay in a trade, how many trades you take, and how much profit you're going to try to take on it. Then this is the key here. SPY super system must align. If you're going long, a swing type trade, the SPY super system has got to be telling you that the institutions are in the trade. You can have multi-time frame and current time frame momentum. Both have to be bullish for longs and bearish for shorts. All right, and then relative strength and relative weakness. We talked about that. And then try to enter near support, enter near resistance. You're going to get a few of them. They're going to drop out the bottom here. Then you pick the best one. Okay. All right. This is just the same thing written out. SPY super system indicators must align in the direction of the trade. Critical. Stocks to be traded should have daily and 5-minute charts aligned. This is for any kind of long, all day trade or swing trades. All right. And have patience. I reinforce this a lot. By the way, on a 5-minute chart, if you're going long, the stock price needs to be above the VWAP. Don't go long a stock that's below the VWAP, and it should be below the VWAP if you're going short, because that's what the institutions are looking for. If the stock is below the VWAP and you're going long, you're fighting the institutions. All right, just so you know, inside the room and on the alert service, these are the setups that we use, the strategies that we use. I do a lot of straight calls and straight puts. I do straddles and strangles. This is a non-directional trade called straddles and strangles. I do debit spreads using weekly options expiration. And we do quite a few of these. We do a lot of straight calls and straight puts. I do time spreads over earnings. This is something we use over earnings, which is non-directional, to capture the implied volatility crush when earnings come out. If anybody doesn't know what volatility crush is, just before earnings come out, the market makers increase the price of the puts and calls. In other words, they jack the price up because they don't know what the earnings is going to be. They don't know how far the stock's going to move, and they don't know what direction it's going to move. So they protect themselves by jacking up the volatility, which in turn creates a much higher price on the puts and calls. So what we do is we have a strategy that when the earnings come out and that volatility comes out of those premium now, because the market makers know where the stock's going and about how much, we gather, we have a structure that allows us to capture that volatility crush as a profit by selling this week's calls and buying next week's calls. And that's it's a fairly simple strategy, but it works very, very well. Very, very good results with this. Weekly ATM strategy, we just closed one down this week. This is a weekly at the money strategy, or I call this the automatic teller machine. Basically, we sell puts weekly against a neutral to bullish stock that's moving sideways and moving up. We sell puts against it every week and for several weeks, and we keep a longer dated put further out in time to protect ourselves. This one we had here was the Alcoa. We were selling the $32 puts for the last 3 weeks. We had a $30 put out in October, so that protected us, and we just closed it down Friday for about a 40% profit in about 3 weeks. It's a very nice strategy to use. It's easy to manage. You don't have to watch it every day. And then we do credit spreads to capture premium over a few weeks, and then the SPY super system, which I had mentioned. These are the high probability, very quick trades we take on the SPY, the Qs, the IWM, or the futures using 5-minute chart. And this is one I cannot alert on, and I can't post in the room because it's too quick, but I do have a video on how to use it and what the criteria is, and I have a lot of people in the room using this extremely successfully. Okay. Maybe read the previous slide on guidance on indicators. Guidance on indicators, is this what you're talking about here? Man. Not exactly sure what you mean by guidance on indicators. All right, if you tell me what you mean, I will try to address it. All right, now just to cover the alert service quickly, the Compass Alert, the SPY Super System Alert Service, it's designed for day trades and short-term swing trades. The next slide. Let me, if you can tell me which one you want, this one or this one here. Which one you want, man? Okay. This is basically what we're identifying how we want criteria for high probability trade setups. Identify the market trend for the day, if there is one. The SPY Super System indicators must align in the direction of the trade, both bullish on the current time frame and multi-time frame, right? That has to be bullish to be going long, bearish to be going short. And the daily chart should be bullish to be going long, and bearish to be going short. Those are the keys. Obviously, we've talked about relative strength and relative weakness, and we've talked about support and resistance. But those are the keys on that one. Okay, this is my equity curve. How this is done this year in the room. Pretty good. This is based on $2,000 per trade. We had a huge July, by the way, as you can see here, but a very consistent bottom left, upper right. That's the whole point of trying to be consistently profitable trader. All right, now we're going to talk about Heikin-Achi. I'm going to spend a little bit of time on Heikin-Achi candles. Anybody here use them all the time that's in the room right now? Use Heikin-Achi candles? Let me know if you do. Okay, here here's a chart with candles on it. These are just, they look like regular candlesticks. These are Heikin-Achi candlesticks. All right, now this is British pound, Japanese yen. It doesn't really make a difference. All right, doesn't really make a difference. What this could be Tesla, this could be gold, this could be anything. But the key thing to take away from this is flat top candles like this that are Heikin-Achi. These are bearish Heikin-Achi candles. Anything has a flat top when under the Heikin-Achi candles is bearish. So you get bearish candles. There's a stacking Heikin-Achi bearish candles right here. Right, so you can see the trend, and you see how easy it is to see the trend. But these are bearish. Now you notice that when you go from one candle to another, the next candle always starts in the middle of the previous candle. Right, always starts in the middle of the previous candle, always, all the time, because of the way these things are constructed. Man, you use them, but always forget to go back to regular candles. Yeah, that can be a little tricky. I usually go to the regular candles when I want to get out of the trade. All right, so this is a bearish trend. Heikin-Achi bearish trend. What we're looking for here, and the best use of Heikin-Achi candles is to find a reversal, what's called a Heikin-Achi reversal, from bearish to bullish. Because if you were trying to trade this, let's say you were bullish on this particular combo of the yen and the British pound, you'd be looking for Heikin-Achi reversal. Now, what you're looking for is something to go from flat top to flat bottom. Flat bottom candles are bullish. These are bullish Heikin-Achi candles. See, it's bearish, it's bullish. Now, this is actually a Heikin-Achi reversal because you went from a flat top to dojis and wicks and tails to flat bottom. But I want to add a caveat here, and that is when you're looking for Heikin-Achi reversal to get back into a new trend, you want to make sure that the candle that's creating the reversal, which is this one right here, is as big as the previous ones on the downtrend, or if the trend changes, you want this to be long. I wouldn't take this because it's not big enough. Now, you would have made money on it because you had a flat bottom, wicks and tails, and then it switches back again. And here you go back to bearish again. All right, so this is bearish Heikin-Achi reversal. Here is the bullish Heikin-Achi reversal that you want. Right, you see how big this candle is? This Heikin-Achi candle, as big as the ones it was as big or bigger than the ones that created the trend downtrend. This is where you want to get in, right? So no shadow on the flat bottom Heikin-Achi bullish, and look at how easy it is to watch this trend. Stay bullish, 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 bullish. You're out right there. That's a Heikin-Achi reversal candle. All right, that's what you're looking for. This is a bearish Heikin-Achi candle. This is bullish. You could be doing a bullish trend reversal or a bearish trend reversal, but that's what you're looking for. And I'm going to show you some charts of those actual confirmations, those reversal confirmations. All right, so distinctions of the Heikin-Achi candles. Bullish Heikin-Achi candles have flat bottoms. Bearish Heikin-Achi candles have flat tops. Bullish Heikin-Achi reversal are identified by flat top Heikin-Achi candles, followed by flat bottom Heikin-Achi candles. And bearish Heikin-Achi candles identified by flat bottom Heikin-Achi candles, followed by flat top Heikin-Achi candles. Those are the reversals, Heikin-Achi reversals. All right, and it's just a little bit of information. I'm just going to zip through this thing, but the reason that they open and close in the middle of the previous candle is they combine the open close data from the previous period, whether it's a 5-minute candle or a daily candle, with the open, high, low, close data from the current period. Right, that's how they create it. Right. And Heikin-Achi means Japanese, it means average pace. Okay. And again, here is your understanding the trends with Heikin-Achi. This is kind of the one we just looked at. There's your bearish Heikin-Achi candles, a lot of chop, bullish Heikin-Achi. Now let's say this blue line was a resistance level you wanted to trade if the stock got through there. Right. So here's the Heikin-Achi coming down. Here's a Heikin-Achi bullish candle, and here's a Heikin-Achi reversal candle right on the level that you wanted to get through. If you want to get through that blue line as your support level, your resistance level, I mean, it pops through there, and then you can just stay in this as long as it stays above that level. And notice you keep getting green, flat bottom green after flat bottom green after flat bottom green. coming up to here's where you're going to get out. See the bearish reversal right there? That's where you dump the trade. But look at how easy it is to see the trend. See the trend. Okay. All right. Again, tips. This applies to everything anyway. Make sure you know where your support and resistance levels are on the daily chart. So if you get into a trade, you're not going to run into the resistance before you make enough money to justify the trade. All right. Make sure you're aligned the trade with the current market trend. Look for relative strength and relative weakness. All the usual things that you want to look for on any type of trade setup. All right. So we talked about that. The distinction. Here's the recaps of the advantages. These are Heikin-Ashi candle advantages. It smooths out price action, reducing noise. Allows you to stay in the trend easier. You're not going to get shaken out so quickly. Makes identifying the trends much easier. Identifying improves identification or identifying confirmation of trends or trend reversals. This is the main use to me of Heikin-Ashi reversal candles. Heikin-Ashi candles is identifying trend reversals back into the original trend. And it does help identify potential exits when the candle bodies shrink or the reversal occurs. Right, those are the advantages of them. Now I'm going to show you a couple of quick charts, and then I'm going to go to some live charts on these Heikin-Ashi candles. This was Uber back from May 1st, a couple of years ago. It doesn't really matter when it was, but this is my TC2000. This is another charting program I use, but it shows up nicely on here, so that's why I use it. So if you look at May 1st, this is May 1st in Uber. See the gap, and then another gap, and then a nice move up. All right, so this is the candlesticks using regular candlesticks, right? May 1st. Now let's look at a Heikin-Ashi candle on May 1st. You see what you get here. This was your bearish trend here, flat bottoms, flat tops. You switch to a flat bottom. This is a Heikin-Ashi reversal candle with a flat bottom. This is where you would take the trade, okay, right here on May 1st. And then you had these beautiful candles all the way up. Now notice something. What do you see about this candlesticks and these candlesticks? The gaps are gone, right? No gaps. The gaps, you don't get gaps in Heikin-Ashi candles because it's using two candles created. So this is where you would have got in. If you were trading this as a Heikin-Ashi reversal, this was your Heikin-Ashi reversal right here. You'd be in, you would have been in for this big move up right here. All right. And you can see how long you can stay in it. The bottoms stay flat, they stay flat, they stay flat, and then it flattens out. Now, the colored candles here, this is on my TC2000 chart, which I color them blue when the Bollinger Bands are expanding. Basically, that means anytime they're blue, I'm getting a compression break. Anytime they're pink, I'm getting a compression break to the downside. But that's not the critical point here. The point is, this is a Heikin-Ashi reversal candles and how you would catch it using Heikin-Ashi candles. And I'm going to show you some of those. All right, so we're going to take a look at some of the option room trades. Not yet. We're going to look at some Heikin-Ashi, live Heikin-Ashi reversals from just this past Friday. All right, so I'm going to switch over to a couple things. First, I'm going to go to this. Okay, I'm going to go to the SPY Super System. All right, so here's the SPY Super System. If you're in my room, this is what you'd see all day, every day. This is the charts that I have up. Okay, so this happens to be the SPY from Friday. These are Heikin-Ashi candles on the SPY from Friday. You can see here there was a Heikin-Ashi reversal right here to the downside, but you see how it had a VWAP right here. You run into the VWAP. But this is the SPY Super System. We got some scanners on here. These are cascading up stocks. These would be relative strength stocks, relative weakness stocks. This is a new scanner I'm testing to find a high probability swing trades. But here's what it looks like. So I'm going to look at a couple of stocks that I identified as Heikin-Ashi reversals. Now, this is SEE, all right? This is sealed here. We got to go to a daily chart because we're looking for reversals on a daily chart. All right, so here's a daily chart on SE. Right, so you see the flat bottom here on this candle from Friday. See the institutions are in it. The institutions are in the multi-time frame, current time frame. This becomes a potential long for Monday, SEE. All right, it meets the criteria that I would need to take a look at that stock on Monday morning to see how it trades. Now I'm going to show it to you on TC2000. This is what it looks like on a regular without Heikin-Ashi candles. And then this is what it looks like with Heikin-Ashi candles. See the Heikin-Ashi? This is actually called the Heikin-Ashi confirmation because it's already in an uptrend. All right. So that's what it looks like there. So that's SEE. Another one that looked pretty good from Friday to Monday is Equifax. Heikin-Ashi reversal right there. This just went from selling to buying. This is already buying. Blue and green, bullish. This is Equifax becomes a nice setup as well. Right? You can see the Heikin-Ashi reversal candle right there. GCT, got a couple more that I want to show you. GCT, whoops. Type that in. Okay, it's GCT. This is more Heikin-Ashi confirmation. It moved up, and this is basically a Heikin-Ashi continuation because this was the actual Heikin-Ashi reversal here, and this is a continuation of the trend after it had a wick and a tail here. But notice bullish and bullish. Trend is not bullish, but that's okay. In this particular case, you can overlook that. On GCT, this is what I would look at on my TC2000 chart when I'm looking at technical setups on this GCT. See this nice move up. These are Heikin-Ashi candles, nice move down. Typically, you notice when you get into a candle that has a flat bottom that's blue, that it continues, and a flat top that's red, then pink, that it continues. But here we are with this one right now. We had another flat bottom on Friday. Nice setup on that. This is a regular chart on it right here. Moved up, pulled back. Technically, it's set up beautifully for a long up to about 33.07. All right, and I have in the room, I show these TC2000 charts with my support resistance levels all the time during the day. Right, and I think RDNT will be the last one we'll look at for a long. Here's RDNT. You can see it there, Heikin-Ashi reversal. It's actually a Heikin-Ashi continuation. Look at the institutions buying the heck out of this RDNT. So is it a good one? Sure it is. And one of the things you always want to look at on a daily chart is you want to look at the context of the trade itself. How is this thing trading day after day after day? Look at this thing grinding up. This white line is my 8 exponential moving average. This 15, this orange one is my 15 EMA. This is what I use to tell me if the stock is in a trend. Look at how beautiful that is. One of the trades we took recently was GLW, Corning. We get into it as it pulled back. See how it pulled back to the 15 and bounced? This is where we get into it right here. Beautiful trade in Corning. Really a beautiful trade in Corning. If you look at Heikin-Ashi, whoops, you're going to see the Heikin-Ashi reversal occurred right here, and then another one right here as it moved up. All right, I'll just show you a couple of shorts just so you can see. I just kind of want you to grasp how I use these to find out the swing trades. This is GGAL. All right, so this has been bearish from here. See this breaking down? We had buying, and then we had selling. Flat bottom, flat top, flat top, flat top. Now we're getting wicks and tails, and we go to flat top again. This is a continuation to the downside of GGAL. Be a beautiful setup for Monday for a short. All right, it looks really, really good for short, and it's been short for a while. INCY. Show you INCY. Is INCY. Big Heikin-Ashi reversal to the downside. Notice the chop here. Buying, now we went to buying, now we went to selling on both the Heikin-Ashi, both the multi-time frame and current time frame momentum. As you get a flat top candlestick on INCY, that's a Heikin-Ashi reversal candle to the downside. Okay, and GoGo is another one. So these are all good setups for Monday. GoGo, Lulu is one I actually just closed on Friday I was in this thing for a short with a debit spread, a weekly debit spread. Closed it out for a 50% profit on Friday. Lulu is nice short as well. And Intuit is another one I just spotted last night on Intuit. Nice breakdown in Intuit right here. Looks like a very good short. So these are some decent trades. I would make a note of Intuit for a potential short on Monday morning. This is a really beautiful downtrend in it. You can see the Heikin-Ashi reversals here, and then compressed, then another Heikin-Ashi reversal, compressed, and here we are breaking down again. I think that's a good setup for a short on Intuit. All right, so yeah, that one you might want to jot down. Okay, all right, so those are Heikin-Ashi candles, how to use them. You can use them on 5-minute charts as well. If we switch to 5-minute chart here, as I showed you, this is Intuit on a 5-minute chart. We'll go back. Can we find any trades in it on yesterday? I probably can. Yeah, right here. You see this one went from buying to selling right here on that candle. As it broke down, there's the 15 EMA. That's a perfect short right there. And you stay in it as long as the stock stayed below the 15 EMA. All right, as long as it stayed below the 15A, you stay in the trade, you stay in the trade, you stay in the trade, and here's where you would get out. See, it went back to buying again at about 120, but you'd have been in this trade for about an hour and a half off of the Heikin candles and also the breakdowns of the institutions going to selling here, and they continue to sell. You're just riding it down. All right, so that worked out pretty nicely. SPY was pretty much bullish yesterday, most of the day. I can go back and look at some of it. Here it was in the morning, and you can see these. We'll look if I can actually candles, and we'll look for some buying here. But there it is. We get above the VWAP. Here's where the trade would take place. See how it's compressing here, and its current time frame momentum is green. Institutions are buying. This is where you would take the trade. Right there, as it pops above the VWAP and the 15, and you get a pop out of the box symbol at 10, whatever time that happens to be, 10:45, and then it goes up, and then here on this candle you would get out, right? Because you're not going to be in this trade long, but you got 3 nice candles on it, right? So that's how you would trade intraday trades, and there was some good. Was another beautiful one here. You're just following your indicators. All right, let me zip back here. Okay, so those are some Heikin candles. Anybody have any questions on those? Those will help you trade. I'll tell you that now. If you switch over to those, it's very simple to do. And by the way, on the SPY Super System, if you want to change, all you do is click on Style here, and you go to a type of chart, and you can go from regular candlesticks to Heikin candles back and forth. Okay, there's regular candlesticks there. And by the way, on these, you can just click on these, and they'll bring up the stock for you. Like if I was looking for stocks to swing, these are good ones down here. I look at GVDC. You can see how nice that looks. KTOS looks good. IBIT looks good. These are mostly crypto stocks. Caterpillar looks pretty good. So that's you can just click on that and get a fairly good picture of the chart itself. Okay. All right, so I'm going to show you some of the results we've had trading the SPY Super System in the room and on the alert service for a while here. And there's a couple things I'm going to focus on. First thing, this is in 2023 using $2,000 per trade. We made about 60,000 in the room in the alert service, 60,000. In 2024, same 2,000 per trade, about 55,000. Pretty good. Again, the profitability is a lot of it's depending upon the market that you're in. If you're in the swing type, if you're in a trending market, if the market is trending up, you can make more money than you can in choppy markets, obviously, because you can stay in the trade long. You can also take larger positions. But anyway, still 55,000 was pretty good. I want to kind of point out one thing. If you remember, if you were trading back in April when they put the tariffs on, and then they took the tariffs off 2 days later, which they took off because the bond prices spiked up so much. That's actually why they took those tariffs off. You can't have the 20-year bond going up that high. It makes it very difficult for the U.S. to basically redo the debt. They have to obviously buy back the bonds they've got out there. We only had these 4 trades on during that time period. The SPY was down over 10% in 2 days. In 2 days, we had these 4 stocks on. We were short all of them. We were on AVGO, we're in Nike, Sarepta, and NNE. Right, AVGO we get in for $75 a contract, get out for $1.04. Nice 39% profit, made $7.54. Nike we get in for $2.85, closed for $9. This was massive. This was our biggest trade of the year. When the tariffs went on, Nike, of course, makes all of its products in Vietnam. They were talking about a 39% tariff in Vietnam. Nike tanked. We were in it, fortunately, and I'll show you the chart. It made 216% on that profit, on that trade. So $4,300 for $2,000 invested in that trade. Okay, Sarepta, we also got in for 450, out for 8, and for NNE in for $1.80, out for 225, 25% profit. 25, 35, 40, that's the normal profits that we see. We don't usually see a lot of 200% profits. Just the current few months, last few months, this is June. Again, I was on vacation for 2 weeks in June, so we didn't do a lot of trades. We were 10-1, 91% win rate, made 37.90 in the room. July, this was a really good month for us. We did quite a few trades. And by the way, you can see we take losses. I want to make sure everybody knows that nothing's 100%, but we had a nice July. These are the trades we took, but notice the percentage gains. This is the normal percentage gains you're going to see in most of our trades. 40, 20, 30, 50, 20, down to 10, 15, 19. This is the kind of trade you see. We did have 166. That's that Sarepta trade. This is a different Sarepta trade, but same kind of gain. We don't usually get big ones like that. And if you're looking at a service that tells you that you can get 100, 2, 3, 4, 500% on the trades that you take consistently, you can't, regardless of what they say. So this is just basically grinded out and stacking lots of profits. Now July was 30 wins and 3 losses, a 91% win rate, and 16,829 profit in the room. A very big month for us. That's not common. That's a very good month for us in July. August, we had 20 wins, 4 losses, 84% win rate, 59.60 profit. And here's September so far to date. These are all the trades we've taken in September. We're 9-0 on all the trades we executed or entered in September and got out of in September. We still have a couple trades on. 2,000 invested in each trade has produced 4,600, a little over 4,600 in profits this month. Pretty good for half a month. Let me sip of water here. All right, so this has been a good month. You see the percentages, nothing huge. 25, 33, 13, 33. This was a weekly ATM we just closed in Alcoa that I just told you about. So a good month so far. We're in 2 other trades right now. We'll probably end up with about 20 trades this month or so, 20, 22 trades. So just to go back to 2024 to run through these things. Now, I've kind of already covered what I really wanted to cover on this, which was what you normally can expect for percentage gains. This was January of 2024. You can see the gains. Again, it's exactly what I'm talking about. 39, 21, 32, 37, big one at Boeing 96, but typically 23, 25, 26. This adds up. These kind of percentage gains adds up. 7,500 in profit in January, February 11,745 in profits, 92% win rate, which is very high. It's very hard. It's very hard to maintain a profit. A win rate of over 85%. Very, very hard. Right. So that was February. This was May. Here's a bunch of time spreads I just wanted to show that we take on earnings over earnings. We had some nice ones that month. A lot of trades in May because there was a lot of earnings in May. Just October will be the next big month for earnings for us. But again, see 38, 40. Typically the time spreads usually make between about 25 and 40%. We had a big one here that made 50. We had one made 71. We had a 100% loser, which is very rare with time spreads, by the way. Generally speaking, you don't get 100% losers because the way they're structured, usually there's still some premium in it. But if you get like this was a news event, if you get a huge spike in the stock, way up or way down, like 30, 40% move, then it's very difficult to recover from that. All right, so there was May 15-2, 88% win rate. That was the alerted trades, 88% win rate, 81% in the room. But room still made 57, alerts made 49. As June last year, 86%, 92 in the alerted trades. See the percentages. These are what you're going to see. Typically, that's what you're going to expect, time after time after time. Right? July 22-4, 85. August 17-2, 4,300. This was my only losing month in 3 years with this service. This was September of last year. We had 8 wins and 5 losses, a 62% win rate, which is, to me, it's embarrassment. But sometimes that happens. The market didn't give us much cooperation. We had a couple of big losers in there, but we only lost $1,786 in the room and only $295 on the alert services because we missed out on the big 100% loss in the alert services because I didn't post it out there. I don't send every trade on alerts. There's reasons I don't. I won't go into every reason, but obviously if the trade's going to be, half an hour, I'm not going to post it. And if I take it at 3:45, I'm not going to put it on alert either because it just doesn't have time to get to the alert members and have them get it in there. But anyway, this was 1786 loss in September. And then in October, look at the bounce back. 17 and 3, $7,400 profit. And the alert, 6,000 profit. November, same thing. So I won't go through every one of these. Again, we had profitable month, profitable month, profitable month. This was the first few months of this year. 84%, 89%, 83%, 85%. Nice profits all the way through. Okay. So those are the results. I'm going to show you one other thing about the SPY super system in just a minute, but I do want to just kind of cover the alerts. People ask me what do the alerts look like? On the Nike trade, this is what you get. You get an alert that's going to have the date. It's going to have the stock symbol, Nike, buy the April 11th 67 puts. All right, this is your expiration date and your strike price. April 11th expiration date, strike price 67 puts. So we're going short, and you pay $285 for it. All right, and then that'll be the whole first alert. Then when we decide we want to put a sell order in, you'll get the same alert, but it'll say sell order on it for $9. And then when the trade is closed, you'll get one that say they were sold for $9 on April 3rd. Right? That's how that service works. Derek, are these all day trades? No, they're not. A lot of these are swing trades. If you go back and look at some of these things, a lot of them are swing trades. There are day trades, but a lot of them are swing trades. And one thing to keep in mind, since I use the daily chart for any trade that I take outside of a SPY super system trade, when I'm just trading off the 5-minute candlesticks, every single bullish trade is going to have a bullish daily chart. Every single bearish trade is going to have a bearish daily chart, which means if you can't take trades, day trades, in other words, if you're under PDT or patent day trader rules where you don't have 25,000 in your account and you can only take three day trades in a 5-day rolling period. So if you've already exceeded that, then you would have to hold the trade overnight. If I take it off during the day, you can hold it overnight because it was set up using the daily chart, which means if it's bullish, it's still going to be bullish. So there's not a problem with that. But I do have quite a few day trades. The SPY super system trades that I'll talk about, Derek, are the ones that are really day trades. So again, how do we achieve these stunning results? I think we know. We identify when the institutions are in the trade, when the market internals are heavily bullish or bearish. That's how I do it. And we only take trades when both of these are in our favor. I will take trades when the institutions are in, if the market internals are neutral, right? But I won't trade them if the market internals are against me. So we're only taking trades, again, when the institutions are in there, and we're looking for the very highest probability trade setups using technical analysis. And how is it done? I talked about this again. We do triple screen assessment or multi-time frame assessment on momentum, trend, and money flow. But the momentum is the most key thing here. Derek, do I scan on daily time frame or something like a 4-hour chart? I do. This is the way I scan on the SPY Super System software. All right. These scans here can be set up for daily. That's a daily scan. That's a cascading up on the daily scan. I can also switch that to cascading up on a 5-minute chart. So so I can use it for 5 minutes a daily on cascading up, 5 minutes on daily on cascading down. And this is a daily chart. Most of my scans that I do when I'm looking for chart trades, I scan on the daily chart, and then then if the daily chart's bullish, and then I'll go down to the 5-minute chart. But I only use the 5-minute in the daily. I don't use 4-hour. You can, but I don't. Okay. Back we go. All right, so we've already seen this. This is this obviously is the SPY Super System that we looked at earlier. I'm going to show you a few other things here. Now, if you buy the SPY Super System, which we're going to offer the SPY Super System to you at the end, where you can actually buy the software,
and put it on Thinkorswim and trade anywhere you want, but you can have it on Thinkorswim. You'll get it. One that looks like this, template that looks like this. You'll also get a template that looks like this. This is for folks who want to just trade intraday, quick intraday 5-minute charts. In other words, they're not worried about the SPY super system current time, multi-time frame momentum, just the current time frame. You get a template that looks like this, right? Just current time frame momentum, VWAP, momentum indicator, pop out of the box symbols into 15 EMA. That's all you need to trade intraday trades. All right, this was a trade we took on the SPY super system using 5-minute candles. This is a Heikin-Achi reversal. We took it right here. You see the compression and the Heikin-Achi reversal right there. This is where we took this trade. As long as it stays below the 15, you stay in the trade. See how nicely this thing worked? I don't even know how far it went, but this shows you. And you can see when we took this trade, see what happened? The current time for momentum went from buying to selling right there. Buying to selling right there. We take it, it's a Heikin-Achi reversal, we write it down. It's really not that complicated once you understand these indicators and what they're telling you. They're telling you that the institutions went from buying to selling this thing on the triple Qs. Now, I want to just cover real quickly the SPY super system trade. Now, for anybody who's interested in trading off of 5-minute candlesticks, these are, some people call it scalping. This isn't really scalping, but they're quick trades. You may be only in the trade for anywhere from 1 to 6 5-minute candlesticks. Right? So you don't care about the daily chart. You just care about the 5-minute candles, 5-minute candlesticks. So this is what I've been able to do with the SPY super system methodology using just 5-minute candlesticks. Now, I want you to understand something. These results are my results. All right. These don't reflect the results in the room because I don't know what they are because I can't post them. I can tell you when the trade is setting up and I'm getting into it, but I can't post it. It's too quick, and I can't alert. It's too quick. But these are the results I've had. But a lot of people like to use these because you can get a lot of trades. In August, we had last August 56, 6, and 2. We had an awful lot of SPY super system trades. Depends if you get a nice trending market. But these are the results I've had. These are the profits I've had. And now remember, with these SPY super system methodology trades, offered just the 5-minute candlesticks, you're only going to have one trade on at a time, and they're going to be very short duration, and you need to watch them. All right, it's not something you can put on and leave. Again, November results. These are really good results for the SPY super system trades. Now, this is October through December, but one thing I want to point out here is the SPY super system trades that we're just talking about here. Right, this is what October was for me. All right, this is my trades. All right, 89% win rate, $4,800 profit. And this was the room, 17 and 3, $7,400 profits. These are not included in each other. This is a separate trading methodology with a separate P&L. This is a separate trading methodology with a P&L. If you were in the room, you would have got results like this. If you were trading SPY super system, I don't know what you would have got because I can't post them. All I can tell you is the ones that I found. I've got a lot of people in the room that trade more than I do on this because that's what they like to do. But for swing traders and folks who are fairly new learning to trade, this is not what you want to do. You want to stick with the room trades. All right, here's November, good. This is December, very good. And here's the fourth quarter of last year. Again, 24,000 in the super system, 17,000 in the room trades. Right, very good results. All right, so I'm going to talk about a couple of SPY super system trades. I want to show you the indicators and how they work, so you can see it happen here. This is an old template because it doesn't have the momentum at the indicator at the bottom, the Laguerre indicator. But what I'm showing you here is a SPY super system trade on the SPY off a 5-minute chart and what you're interested in. This is all you're interested in as far as the indicator is concerned: the current time frame momentum in the VWAP. In the 15 EMA, that's it. All right, so here's where we took the trade. The institutions were selling. They went to buying right here on the 5-minute chart. Right, current time frame went to blue. There was a pop out of the box above the VWAP. This is where you take the trade. As it breaks above here, institutions buying. You don't care about any of these other ones. Institutions buying, and up it goes. So this was the trade we took. That was $220 of profit per contract. That's a lot. You usually don't get this kind of a long enough run to dip that. Most of your trades in these things are going to run somewhere between $80 a contract to maybe $150 a contract profit before it switches back again. All right, so there it is for the SPY super system on the SPY. All right, and here's another trade right here. All right, get in here, get out here. See how quick that trade was? In and out as the institutions were selling this thing and it broke down below the 15. All right, this is the one we just looked at a little while ago, except we've just got this template up. All right, see how this template was yellow here? Went yellow. It did switch to blue right here, so you have to be cautious, but we're trying to stay in it below the 15, which is stay below the 15 and get out right there. Again, and here, this is the SPY Super System trades with the new template layout with just the current time frame momentum on it. Okay, pretty nice trades. This was a nice trade, another SPY trade off the 5-minute chart right here. You notice when you look at the chart, you can see the institutions are all over this stuff. They're buying, 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 buying. Here's another one here. Okay, it went yellow, it went blue. We took it here. We didn't make much money on it for a good long time. The IWM, we're just kind of moving sideways. Russell 2000 doesn't really move as fast, but we stayed in it for quite a long time. And then we get it way up here. This is a long time to be in a SPY Super System trade. Long, long time. But it did go blue and then stayed green the whole way over here to yellow again. Here's the SPY Super System trade here. Nice breakdown right there. As it breaks below the VWAP, everything's red. See the compression, you want to wait for the compression break, that's where you take it. Right here, SPY Super System trade to the upside. It went to blue. We're waiting for compression. We're waiting for a compression break above the VWAP. There's the compression break that pop out of the box candle. You take it right there. And that was on 823, $150 profit per contract. Another SPY trade here. Now, the reason I put this one up, I want you to see something. All right, so here's your candles, here's your indicators. Obviously, the indicator on the 5-minute chart, this is bullish, so this would be bullish. But notice where it is. It's right up to the VWAP and stopped. And then the next candle did a doji on the VWAP. This is where you would take the trade, right here. Okay, it's blue, which is fine, but now it's above the VWAP. So your entry is above resistance. As it breaks through resistance, you take it out, and then you get out right here. Okay. This is a trade I took on the SPY that I went short. See how it breaks below the VWAP and it pop out of the box symbol, breaking below the VWAP. See, it's red. And I take it down, and then I get out right here. And then it comes back up again, and notice right here, it turns blue. Went from selling to buying right here. And it's above the VWAP and above the 15 with a pop. I take it long right here. And it goes right up to the pivot point, which I get out just before the pivot point. So made money short, made money long on that trade. All right, this is another one. So you can see I didn't put entries extras on here. I want you to see the current time frame momentum right here. Where would you go short? Something like here. You got green. Now you got selling right here. This is the perfect place to go short right there. As it breaks down below the 15, you can stay in it because it stayed below the 15 the whole way. All right, so those are all SPY Super System trades. Now I'm going to show you some trades that we take in the room and on the alert service. This is one we just did recently. This was off a 5-minute chart, but it was a swing trade. This is a line, ALGN. This was a trade we took just recently, 51% profit in an hour on this trade. Now you can see the compression, you see the current time frame momentum right here. Now, since this could have been a swing trade, the daily chart also had to line up, by the way, at this time. We had to have multi-time frame momentum and current time frame momentum lined up bearish on the daily chart, which they did. But this is a 5-minute chart. This is where you would take it. As it breaks below the VWAP, with a pop out of the box symbol, you take it right there. Notice it went buying to selling right there on that candlestick. And you stay in it and stay in it and stay in it. And again, 51% in an hour. We get out as it flattened out down here. And then it went back to blue, you can see. But all this time, the institutions were selling this. It stayed below the 15. Nice trade. This is a daily trade. This was a trade off the daily chart, URGN, that we just recently took in July. 48% profit. Here's the daily chart. So what do we need? We need the current time frame and the multi-time frame both be bullish, which they were. Blue is bullish, the screen is bullish, right? So they were lined up right here. We wait for a compression. It pops here. We take it right here, and we ride this thing up. It'll work way too well for this one. We get out 48% profit right here, right? NVIDIA, This was off a daily chart as well. We've talked about this one already. This was the PBO, the pullback opportunity with the pop right here as it broke up. Everything was, institutions were buying it, jumped into the trade and made a nice profit on it, 32%. SMR, I've already showed you that one as well earlier. Here's Nike, here's the big one we had, 216% profit. This is where we took the trade. Look at the institutions selling this thing. They're selling the heck out of this thing right now, right then. So we took it here, and actually we had profits that day, but we stayed in the trade. And stayed in the trade. It went sideways, but it was staying red. Institutions selling on the multi-time frame and current time frame, and here's that big drop based on the tariffs that went in, and we grabbed profits right here. We closed it that morning as soon as it gapped down like that. One of the things rules I go by that I say in the room all the time is gaps are gifts. If you're on a long trade and it gaps up, take the profits. If it gaps down, takes profits. Because after a gap, a gap and go, which would be gap and keep going in that same direction, is the least likely occurrence of that trade. So you're better off to take profits right on the open on a gap. Not only that, a gap creates volatility in the premiums in the options, which creates the price goes higher. So you're also taking advantage of that. All right, so that was Nike. This was Sarepta. Same thing, we took this one, made a nice profit on Sarepta. See them selling? HIMS was a nice long trade. I get in here, get out up here, 25% profit. Actually did leave a runner on for 269%, but I didn't post that anywhere. So, but this is where we took the trade. It was all green. Palantir, nice trade here. Notice it's going buying, goes to selling, then goes back to buying, breaks out of compression, goes green, take it right here, out right here. 31% profit in 2 days. And this was a Lulu overnight trade. Lulu gapped down on earnings. We didn't take it here. We waited for it to compress. Notice it went from buying on the daily chart, on the multi-time frame momentum. Then it went to selling on the multi-time frame momentum. I could see the institutions coming back in, took a short here, in at night for $1.92, out in the morning for $300 a contract. So that was a pretty nice profit, 56% profit overnight on Lulu. Amazon was a nice one. So I won't keep going over these. I think you can see how these work. I mean, you can see the compression here in ENPH. Take a trade right here as it breaks down below the 50, below the 15. Take it right here, 20% in an hour. Is Verizon 50% an hour on this trade? Compress, breaks down here, drops down pretty hard. 50% an hour on Verizon. This was an intraday trade, so we were only using the current time frame momentum right there. Okay, Tesla was a nice one. That was an overnight swing trade. Okay, that covered the charts. And if there's any questions, I'd be happy to answer any right now. I'm going to go ahead and just kind of wrap it up, show you the offers, etc. Understand those great results we've had is because of the SPY super system telling us when institutions are in the trades and when they're not. All right, so this is the offer that they've got. This is a pretty special offer. One of the things you can do is take a 2-week trial, and then it rolls over to $396 a quarter after 2 weeks. That'll give you the trade alerts, it'll give you my trading room, and it'll give you my videos. I've got about 31 training videos on all the different strategies we use, right? So that's one thing. Now after the quarterly, it switches over. After the 2-week trial, it switches over to the quarterly, $396 a quarter. If you want to get better pricing, you can do the one-time payment. This is the one-time payment of lifetime. This will get you lifetime for the text alert services, right? In the Discord room and my training for $24.96 for just the alerts forever. And then you can get also for a one-time payment. This is a spectacularly good deal. You get my trading room, you get the software, the SPY Super System software we were just talking about. You get that, and you get it forever. You get my trading room forever. You get the SPY Super System software with all the updates that come out to it for free. All right, for free. And also you get the master class, which is all the training the videos that I've got. They're on all the strategies, weekly ATMs, strangles, straddles, everything, every strategy that we use. And then you also get access to the private Discord chat access that we got. That's $24.96 for the software and for my room for lifetime. This is to me, this is a no-brainer. But I mean, everybody is different. But if you're serious about trading, you can get the software, whether you're in my room or not in my room a year from now, you can still have the software to identify institutions when they're in the trades and when they're not. So these are your offers. Now, if you'd like to get a price for a different type of setup, maybe 1 year or something like that, you just call Rory, 786-732-4656, and he'll respond to you. And if you have questions about that you'd like, just put your number and name in the chat box, and he'll get back to you. Is this used in Ninja or TC2000 software? This SPY Super System is used on Thinkorswim and Ninja. TC2000 is completely separate. That's a charting program that I use, and I do use some scans on there. But the SPY Super System runs, for me, it runs on Thinkorswim. I don't trade on Thinkorswim. You don't have to trade on there. But it also runs in Ninja, but it looks different on Ninja. It's called the Money Flow Tracker over there. But it tracks the same type of information. Most people that trade on Ninja are trading futures. You can trade futures in Thinkorswim or anywhere, but all you really need is the SPY Super System running on Thinkorswim to identify whether you should take a trade or not. Okay. Can I put the phone number again? Sure. Right. 786-732-4656. All right. That's Rory. Let's put that in there. He'll get back to you. Where do I mainly trade? You mean what platform do I trade on, Chris? I trade on Tradier Pro. Tradier Pro. The reason I trade on Tradier Pro is because the commissions are so. Well, I don't pay any commissions. I pay a flat fee every month, $20 a month, and I don't pay anything, any commissions on options or stock. Now you do have to pay ACN fees. Everybody has to pay those, but those are pennies. But I don't have any commissions, and I trade thousands of option contracts. I mean, probably tens of thousands of option contracts. So it's a big deal to me if somebody was charging me 15 cents a contract for options. So Tradier Pro. Carlos, you get the number okay? 786-732-4656. All right. So that pretty much wraps it up. Again, this one-time payment right here for lifetime is extraordinary. This isn't going to hang around much longer. But again, if you want to do something of a different time frame, just talk to Rory, 786-732-4656, and he'll work with you on whatever you want to, what appeals to you. But this special is pretty special. So if you can, I would take advantage of it. Get it, Carlos? Okay, great. Thanks. All right, thank you very much, everybody. I appreciate you were taking a Saturday afternoon. As I know, it was a long day with Traders Corner. They have some excellent traders and presenters out there. I'm not really a professional presenter. I'm a professional trader, and I'm not really a marketer. So I'm just trying to. I have a methodology I think that is 85 to 90% win rate per month. I think the results speak for themselves. So look forward to seeing you in the room come next week. Everybody have a great weekend. Enjoy your Saturday and Sunday. And again, we'll see everybody again on Monday. Have a great weekend. Trade well.
Thank you, David. That was a perfect way to wrap up the day. Real performance backed by rules, results, and experience. His promotional link is now available in the chat, so grab it while it's there. That wraps up another incredible Traders Corner Online Investor Summit. Thank you for being here. A huge thanks to all the excellent speakers for delivering such high quality, actionable content, and a thank you to the audience for choosing to invest in themselves this weekend through this informative trading summit. Make sure to check out the chat one last time to grab any links or offers you may have missed. We hope you walk away from today's event with new ideas, clearer direction, and the motivation to finish this year strong. This is Anthony Chapman from Traders Corner signing off. Thank you, everyone, and I hope you make some money next week. And don't forget the Fed Chair, Jay Powell, speaks on Wednesday. Have a good day.